Alright guys, welcome back. First of all, not financial advice. Consult your licensed financial advisor. I'm not a licensed financial advisor. It's really risky out there. Do not over leverage. Do not trade too much. Over trade. Alright, so everything I've said in the past few months has pretty much happened again. I've been saying all winter we're in a recession. GDP came out. It's negative 1.4. Okay? And that's from their numbers. So, who knows? There's a lot of moving parts. But I'm going to break it down what I think is going to happen in the by the end of this year. Because that's as far as I'm willing to go. Because you never know what's going to happen in this wild, crazy world. So before I go into the stock market and I'll look at gold, silver, energy, commodities, the economy, what's going on. Quick reminder. So Hex, at the all-time high, had what, like 50,000 people staked? Well, now we're over 90,000, so that's almost doubling, right? Or maybe it is doubled. I'm not exactly sure how many people were staked at the all-time high, but it's almost doubled if not. Okay? That's really important. PulseChain, probably coming out soon. Mid-May is the target. If not, I mean by the end of May. The price already starting to reflect that. Okay. It's had an 80% drop. This right here looks like a bottoming pattern. Okay. My last video I told you guys, get your liquid Hex now so you guys could take part in the, because you need liquid Hex to mint Maxi. Okay. And the minting phase for that is over in about a day and a half. So I would get my liquid Hex now. And I'll make a video like Saturday. So the Hex ecosystem's looking very healthy. It did very well in the bear market for Hex as we gained more people and more stakers. If you were staked that entire time, your yield was nice, right? Now, when the price goes up, because of all the coins you accumulated that you were rewarded for staking during during this dip, this correction, when the price goes up, your balances are going to multiply in value, in dollar value terms. And only people who've been in since day one have experienced that, who've sat through the corrections and dips. And I've explained it many times how that works. The adoption, it's only going up. And eventually we'll get that hockey stick thing going with the adoption. And PulseChain will probably be the catalyst. And listen, there's a lot of big money coming into PulseChain and serious investors, right? And they're gonna have no choice. Everyone, they can't ignore us any longer. The entire industry, it's like ignore us at your own peril. So, like, I don't want to say there's gonna be another dip because I don't know. There might be, because Bitcoin Ethereum charts look scary. But if there is another dip back down towards 13, 12 cents, I would buy that up. If there isn't, this breaks out, it's pretty much momentum trade. It's a breakout, right? Anything above like 16 cents, that's a breakout. And I would buy on that, just looking at TA. Alright? So bottoming pattern, Maybe one more dip if you're lucky, but I mean, anyways, you should be you should be looking to get your liquid hex for Maxi, right? All right, let's talk about the stock market. So here's what's interesting. Real consumer spending for Q1. It's up from the previous, but that only reflects how much people are spending. Does that mean they're buying more goods and services? No, maybe they're just paying for more because inflation is pretty bad. It's running around 20%. And that's why I said we're going into recession. Like, that's all it really takes. Well, that's all. I mean, 20% is really bad. People don't have any extra money left over to buy discretionary spending is pretty much getting annihilated, and people are starting to feel it. I see less cars on the road. I see less garbage cans being put out, or garbage. When I drive around, I notice things. You could tell that things have really slowed down in the US. Plus, there's Europe on top of it, and I'll get more into that. But jobless claims, it's ticked up a little bit versus the previous, but the previous was pretty bad because that also ticked up. So this is just the beginning, right? So I'm gonna cover some news. All right, Elon Musk bought Twitter. That's very strategic, in my opinion, for what he's thinking. And I don't want to get into the tinfoil hat stuff. He can. It's great for advertising for him. Okay, he could promote Tesla. He could promote SpaceX. He could promote neural brain chips. Whatever, right? And he has a lot of pull and weight within the entire equities markets and the world, technically, because Twitter it's a platform where news is kind of created and led. So I've done this where I've had maybe one tweet get 10,000, 15,000 impressions. I get lucky every once in a while, at least once a week I do. Even though a lot of people don't subscribe to my Twitter, but I mean the algos were horrible. They're completely. My account didn't grow since 2016. It barely grew, and that only grew from the Hex ecosystem. But literally since 2016. It didn't grow for 4 years. It couldn't. I would get zero traction. Completely throttled. Same with what you're watching me on right now. So, that's good. That has changed. So, it's a little better. It's not like it used to be, but it's a little better. Where was I going with this? How's he going to buy Twitter? How's he going to go private with it? What was it, $54 a share? I mean, he's got to sell Tesla. Tesla goes down, so does NASDAQ now. Ironically, right? So there's that little piece of tidbit. Here's some more news that came out yesterday. So former Archegos owner Bill Hong. Anyways, it was a $20 billion firm. There's a lot of fraud and wiring and all kinds of craziness. And they leveraged up 20 to 1 from Goldman Sachs, and they got wrecked. And they're also this guy also has a lot of connections with Cathie Wood and ARK Innovations, right? Which is another one of those high growth ETFs. And what I'm trying to say is I'm kind of looking for the next Lehman moment. And since the very bottom of 2020, because of the wicked flu, these high growth momentum ETFs and stocks, the FANGs and NASDAQ and all that, have just been on a crazy tear. The bubble went to like a hot air balloon. So if it's awesome seeing them get wrecked, but at the same time, it's going to have an effect on the entire equity market, because once they go down, they take everything else down, because there's so many index funds and derivatives of them where they're all intertwined, and it's in everyone's retirement 401ks and IRAs and whatever. So here's something interesting. Europe's dependency on Russian gas. Look at this. Entire Eastern Europe is essentially dependent on it. But, so is Italy and Germany. And Germany is Europe. It's the engine of Europe. They pretty much are the strongest economy. They are the ones who still make things. They're industrial. And they export the most and bring in money to the entire EU. And with high energy costs, because they're getting cut off from the Ruskies here, Europe's... It looks bad. Because not just that, their inflation's actually, I believe it might be higher than in the US. And they're still, they have lower interest rates and they're still easing. That's why the DXY, the dollar, is so strong right now, or appears to be. Anyways, this has rippling effects because we live in globalization, right? This is from 2019. Oh yeah, these geniuses went off of nuclear, and they're just 100% dependent on oil and natural gas, and that's from who talks about this, who gets into the nitty gritty of it. He has a video that just came out yesterday. It's George Gammon. Anyways, I watched this as well, and this is why I'm bringing him up. He interviewed Brent Johnson, and they talked about the dollar milkshake theory, and I don't disagree with it. I do think it holds a lot of water and weight, because at the end of the day, I mean, the dollar is still the cleanest shirt in the hamper, right, of dirty clothes. And right now, Europe and Japan are just printing away, and the dollar is the most heavily weighted against in the DXY against Japan's yen and the euro. So if the yen and the euro are doing really bad, then the DXY goes up and the dollar looks better. It looks better. Now Japan's screwed. I mean, instead of raising rates, they're just like, well, we're just going to keep printing at no cost and buying our own bonds. Right? Okay, well, and I believe they just gave out like 10 grand, something like that, to every citizen. So there in Japan, it's runaway inflation already. Europe is probably going to go through that soon, especially with the high energy costs because of the neighboring battle over here, right, in Ukraine. So the dollar looks good. Is it really good? No, we still have like 20% inflation. The dollar's just doing better than the other currencies, fiat currencies. That doesn't mean we don't have massive inflation globally. And there was an interview. Where is it? I posted something about it on Twitter. I don't know. If you're not following me on Twitter, you're missing out. You're like in the dark. I talk about, I don't know, I post a lot of important things. A lot of times I am shilling, but get past it because I'm pumping your bags. Without people, I mean, that's how everything works. We need more people staking, so the liquid supply of Hex dwindles with time, and it's a beautiful mechanism. It works better than the entire global bond market. All right. One of my guys went down to the last race. We were actually in the race this time. and there was some good footage. It's pretty sweet. Where is... trying to find this post. Oh yeah, look. They put up a fence around the central bank. Wonder why. I don't know. I can't find it. Oh, here we go. They're laughing. The ball's on them. I don't think these people are as smart as everyone thinks. They're really not. They do know what's going on, but the fact that they think it's a game, right? It's not. There's a lot of pissed off people, billions of them. Like, and they're just, you know, playing with the world economy like it's a game. And everyone knows the people at the very, very top. It's not a secret. Look at this giraffe neck. Anyways, they were laughing. They're like, oh, you know, and some people might get mad. But the important part about this video is they admitted that they might have printed too much money. Powell was probably the only professional here. I'll say that. 40% or half of the entire supply, monetary supply of the US dollar was created into existence in the past 2 years. If you let that sink in, that how bad things might eventually get. The only reason we're not in hyperinflation is because we're still the reserve world currency. For how long, I don't know. Because, you know, you could tell that the other superpowers are de-dollarizing. I mean, we sort of did it to ourselves with all the sanctions, which brilliant move, right? So dumb. I don't know. Everything's playing out that everyone's been warning about for like the past 2 decades, right? Anyways, but the milkshake theory thing, I do believe is sort of playing out and backstopping the dollar so we don't see hyperinflation yet, right? So here's the thing. And I don't want to get into the dollar. I made a whole video on it. It's kind of complex, but the world needs dollars to fund their debt, and it's the dollar's still the most liquid and the best, and for now, I'm not saying forever, but and the world sort of is on it and needs it. And when the global economy weakens, the demand for dollars actually go up, not down. And that's the theory. And it's an intermediate step towards eventually the dollar does lose hegemony or reserve status. Or, you know what's funny? I mean, what's going to replace it? Global digital? No, guys, none of that shit's actually going to work. They're trying it, but it's not. At the end of the day, all these central banks have been buying up all the gold in the world. And that's what it's probably going to end up being. And they're going to do some some bullshit to control people, but it's only if the masses accept it. It's the only way it's going to happen. And I think after shit hits the fan, I don't think they're going to trust anything that they're going to try to get everyone onto. The only way they could do it is coerce you into it by giving you UBI, and then you take it. And I'm not saying don't. Take it and then go spend it as fast as humanly possible on everything you need, if that ever happens. All right? Just go buy more other, cryptos, and just go buy more Hex and then metals and then things you need. So where was I leading with this? You know what? Let's get into it. So what did I tell you guys? Crash, no return. I've been showing this for over a year. Once it gets above 2.5%, what happens? Stock market starts crashing. I mean, it already... Okay, so here's my crash line, right? When the yield hit 1.6, 1.7, I told you guys the stock market's going to start dumping. And here, we'll look at the... that's S&P 500. I have 2 S&P 500 charts. Okay. Give me a second. All right, here's the NASDAQ composite. So when did the yields start rising on their own? When did the bond market say enough is enough? This 40-year bull market in bonds is over. Pretty much said it in January 21. Okay. Here's November 21, the all-time high for the NASDAQ. So soon after January, hold on. Oh no, January. Here's January 21. Look at this. January 21. Bonds, the yield broke out on the 10-year. NASDAQ since then has fallen 23%. I called it. And I've been trading it very profitably. For the people who've been listening to me in the private group, or VIXI trades, or SQQQ, all of it. Hedging our gold and silver mining stocks, energy stocks, this and that. We've been doing very well, especially with call options. I'm not saying you should do that. I'm just saying that's what I did. So, yeah, it's down 23% since the bond market started crashing. Alright, so if Powell comes out next week, so there's a FOMC rate decision next week, he's got to raise rates no matter what. Now, I know a lot of people are thinking, yeah, but the stock market's crashing and it's a taper tantrum and they're not going to raise rates, or maybe it's just a 25 basis point, or he's got to raise rates at least once in a big, meaningful way. If he doesn't, then it doesn't matter. If he does only a 25 basis point rate hike, if he doesn't do a 25 basis point rate hike, it doesn't hike rates again, it doesn't matter, because inflation is like it's like the natural rule of law. It's like nature, right? If you tamper with one thing, you'll cause an unintended consequence. Well, inflation is the unintended consequence of printing endless fiat. And inflation is the deflationary event. So the cure for high prices is even higher prices. So if he doesn't raise like rates by 1%, 100 basis points, then, I mean, by June, in a couple months from now, prices are going to be even higher. And the stock market can't keep going higher, because where's the extra cash going to come from? Where's it going to come from? If we have high inflation, the inflation itself sort of eats away at the liquidity. So inflation is a byproduct of velocity of money. And then there's psychological points where people just start buying and hoarding goods, and that's when you start getting into the runaway hyperinflationary event. But before hyperinflation and runaway inflation, there's stagflation. And what stagflation is there's inflation, prices go up, people stop spending, prices fall back down. Or prices don't fall back down, but the economy slows down, and the velocity of money slows down, and then it's like it's a recession. It causes a recession. So the recession we're in is caused by inflation. So, and not just that, summer's coming up, right? People drive a lot more in the summer, and they want to travel, they want to get out, and okay, well, the last thing you want is inflation going even higher into the summer, right? So they have to, and then there's an election coming up, right? Towards the end of this year. So if I were them, because there is no good answers, there is no way to fix any of this. It's all, shit's gonna hit the fan no matter what. It's just how you do it and how much time you could buy yourself. That's all it is. Alright, so they raise 1%, which isn't really much in the grand scheme of things. Paul Volcker raised it 20%. We can't raise it 20%. Every business would go under, and banks would literally not exist. They'd just shut their doors, and everyone gets laid off. And layoffs are probably going to start happening pretty soon. First layoffs will be, well, no, they're already happening. Robinhood's laying people off. Elon's about to start laying people off. All right, hopefully. Anyways, all right, so Powell needs to raise rates like 1%. The stock market's going to dump some more. All right. I mean, this chart looks like ass. Another little further dump, maybe around 12,000 on the NASDAQ, or maybe even a little bit lower. Wicks down to like 11,600, 200. That'd be nice. Because, for one, that helps slow inflation, or stops it. Because a lot of money does come out of the stock market into the economy, and you want to bring a stop to that. And then that would definitely bring a stop to it. Although in my previous videos I did say the boomers might panic and then they just pull all their cash out. That's also a possibility. And then when they do that, that'll be somewhat of an inflationary thing as well. Although they don't really need to buy any more things. I mean, most of them who have money in the stock market are already in their McMansions and have their cars. They don't need new cars. They've got their RVs. Like, I don't know. They'll probably just go traveling. Anyways, but some of them might buy metals and commodities. The smart ones will. Anyways, I think he's going to raise rates at least 50 basis points. He should do 1%. The market dumps again. Maybe another, let's see how much we could get on the NASDAQ here. Yeah, I could handle another 7%, another 10, maybe even 15%. It would probably only do like another 10 to 12% at the most, I believe, before they panic. And then for the NASDAQ, metals should sell off because of margin calls and because he did actually raise rates substantially, at least 50 basis points. And then that would sort of put a little cap on inflation. And the reason I think he has to do it, and he's going to do it, is mainly because of oil and energy costs. So here's the Spider Select ETF for the energy sector. I mean, it's on resistance if it breaks above this, and it'll break above this if he doesn't raise rates like 50 basis points or 1%. I mean, at least do that, right? If he only does a 25 basis point hike, I mean, that's nothing. Then oil and energy is going to break even higher. And that'll crash the stock market anyways. So he might as well do it on his terms, not let the energy sector dictate the market instead of the central planners, or that's how they think. So if I was him and I was in his shoes, yeah, I'd raise rates like 1%. Because that would temporarily, for maybe a month or two, or 3, it would bring down maybe oil and other energy. Going into summer, the most busiest season of the year, right? And by doing so, yeah, you're sacrificing the stock market a little bit, but it kind of needs to be done, right? Here's like crude oil futures. If he doesn't do a 50 or 1% rate hike, I believe oil will just break out even higher. And not just that, I don't see things really de-escalating in Europe. And then there's the unknown of when China, makes its move, because it's going to. And not just that, I do believe they're in trouble economically as well. That's why there's like Shanghai is locked down, and people are like in cages and shit, running around in like white hazmat suits. It looks dystopian as shit. But those people are willing to put up with it. I don't know why. There's so many of them. Anyways, that will never happen in the U.S. at least, because we still have rights. We still have self-protection. And Europe, I believe, is a pressure cooker. Like the people there are really struggling in Europe, and I think all summer they'll just protest and burn the cities down if they try to bring back the wicked flu season, right? By the way, what happened to the flu? Don't even know. Alright, and what I mean by that is I do know. I have to be careful, right? Apparently it disappeared. Anyways, what else can we look at? Yeah, my VIX trades, here's the VIX on the left and the right. Just different time frames. This is a daily on the right, 4-hour on the left. Massive gains if you put in a call option on the bottom here, which I did. Massive. Great. It was up 70%. It's like a, like 5x or something. Depends, how far in or out of the money you were. Is the market going to continue to sell off? Yes, but Powell needs to man up and do what needs to be done. And I predicted all of this, guys, right? What did I say? Bearish pennant. We're in a recession. These are all the indices. This is on the left top here is US 100, NASDAQ composite right here. Here's the FANG index. This thing had to have been hit hard because of Netflix. Check out Netflix. It's hilarious. It's down here in the right corner. Hilarious. I love it. I love to see this. Because they're feeding everyone garbage into their minds. And you know what I mean. The worst type of shit. And it's the only thing that's disappointing about it is that the masses don't seem to give a shit. And you should. Because the stuff, I can't go into it. Anyways, it fell to 183 from 700. And you know what? The market's gonna fall some more. It might revisit its previous major breakout back in 2017, which it should, because this was one of those giant bubble stocks from the COVID stay-at-home stocks, right? All the way back down to 132. I'd love to see that, and it should, because it's garbage. But the thing is, this is in the FANG index. So it's bringing down everything else with it. So what does FANG stand for? Facebook, Amazon, Netflix, Google. And they put a plus at the end of it for Tesla and everything else. That's kind of similar to it. So it'll bring down the entire index with it. Hilarious. How much has this fallen? It should have fallen more. 36% on the FANG index. Nice. Let's see a 50 or 60% retracement. Or not retracement, correction. And I don't know if it'll ever go back up once we get there. So what else? Russell 2000, mid-tier, more industrial stocks, I believe. But mid-sized companies in the US doing pretty bad as well. They've all broken. They're all sitting on like a weak support, and the only reason it's support is because the price tried breaking below it a few times in the past month, and they all look very similar if you zoom in. The Vanguard World Stock Index is on support as well, and there's just a huge air gap on that on the weekly chart right here in the bottom right corner. Here's the Vanguard World Index. I don't see a problem with it revisiting the 200 week moving average around 87, maybe 88, or it might wick below it and get around 84. Because there was a giant bubble from the COVID lockdowns and all the money printing from 2 years ago, right? So this all makes sense. A nice correction, and inflation is starting to run rampant globally. Wars are breaking out, right? It's all on par. This has happened before. This is the type of shit that happened during World War One and World War Two. The Roman Empire fell like this. So, and it should work as so globally because we've had a we had globalization already for decades now. The rise of China happened, in 22 years? In 2000, I mean, it probably started early 90s, but prior to that, China was just farmland, and they were all farmers. Now they're, like, trying to become the world, superpower, and it happened quick. And it didn't happen by accident. We did that. So, which if you kind of think about it, was, I don't want to say his name. I'll just say Kissinger. Was he smart to do that? To peg the dollar to the Saudis' oil and then turn China into a manufacturing hub for the U.S. and the rest of the world? Because technically the U.S. is just giving them overvalued fiat dollars, and then we're just getting cheap goods and just endless goods for not the productivity. So the trade imbalance globally has benefited the U.S. for decades now. I do think it's coming to an end now, and the consequences of all that for like 3 decades of just prosperity and whatnot, or 4. I would say the peak was the 50s and then till like the end of 2000. Not the end of 2000, the end of 1990s until 2000. The U.S. benefited tremendously from this, but the consequences are we gutted ourselves of industrial output, right? So we don't export anything except like weapons, and we were exporting a little bit of energy just a few years ago when we were energy independent, but we are no longer that. So I don't want to make this 5-hour long video. I'm starting to go off on a tangent. Yeah. What was I even looking at? And why? I don't even know. Just started thinking out loud. So here's the deal. If Powell capitulates and only does a 25 basis point hike, the market might bounce. But then he's going to regret that like 3 weeks later, 4 weeks later, when the price of gas is like gone up another $1 or $2. And then the problem is he can't do anything because the stock market will bounce and then it'll just start selling off anyways. And then if he does do a larger rate hike, then it just crashes because gas is like $5 a gallon or $6, the national average in the U.S. By then, shit might even get a little more heated in Eastern Europe. And then probably by midsummer, I believe. You never know what happens with Taiwan. So he's got to raise now, dump the market another 10-15%, and then it'll put a little lid on inflation, and then inflation will slowly creep back up. And then eventually he'll capitulate and start cutting rates. The minute he cuts rates, I don't know the timeline when he'll do that, but it'll probably be midsummer because, probably something's going to happen, another event, a big one, like I'm hinting towards with Taiwan. And then he'll start cutting rates, and then after that, it's the commodity super cycle of like the century. By then not by then, but soon, like, so if the stock market dumps another 10-15%, right? That's what I'm looking at. Metals may sell off, especially if he does a 1% rate hike next week. Then that'll give you a buying opportunity on gold and silver, mining stocks. Also, I mean, if he doesn't do a 50 basis point or 1% basis point rate hike, and oil just keeps going higher, it's very highly correlated with gold here. But anyways, here's gold on the left. I don't look at silver because it doesn't fucking matter. It does the same thing. It trades along with gold. Yeah, at some point it's going to outpace gold, and that ratio is going to close because it's an industrial metal as well, but like, it just doesn't matter. I mean, this does look like a nice buying opportunity. It does. But I do think one more slam down because of margin calls on equities and Powell actually raising rates 50 basis points or more could sell metals off. And gold might, I don't know. I don't really see it going any lower than 1840. It's not. Like, we're lucky to see like 1850 or 60. I would technically, you should have loaded up when it went to 1870, and then start dollar cost averaging in around here, and then guess what's going to happen? By then, the economy's weak. We're in stagflation. The stock market's screaming. The financial sector. So when the banks, the financial sector, starts falling a lot, the Fed's going to capitulate because they're not going to let the banking sector go under, right? Because the Fed is made up of them. So dollar cost average in like now and like in the next few weeks into metals mining, and then after that, if you don't have it, you're going to get left behind, because when the second Powell like stops raising rates and starts cutting, it's like a straight shot up for gold and silver and other commodities, all commodities, copper, platinum. Platinum's going to be a big one. I'm looking at some platinum stocks, and then uranium. Uranium's been doing good. It's going to do a lot better in this decade, I believe, or at least 5 years. But you don't want to miss out on this. That's when you start getting those 10, 20, 50 baggers within a year on mining stocks. And we've experienced that in 2020. We experienced it in 2016. We're probably going to experience it in 2022 now, because this is just it's just a correction in a larger macro cycle. So yeah, it's just going to shoot straight up. I didn't even draw this like it's shooting straight up. Don't look at the time on the bottom. It's going to just, just straight up. And it did it in the past. Let me show you. It was 2008, 2007, 2008, during the financial crisis. Here we go. Here's gold. It looked like it was breaking out, right? And then just crashed with the rest of the market. And then after that, you just had, let me bring this to a weekly chart. Here, 2008. You had not a lot of time. So it dumped for 1, 2, 3, 4 weeks. Look how super volatile it was. For 4 weeks. And then if you bought right here, I mean, you're just like, for the next, until 2012, you just made a fortune. Because the mining stocks are the resource sector is the most undervalued in the entire world. And they're going to do their Green Deal build out or whatever they're going to try. And they're going to, guys, the Fed's going to double its balance sheet in the next, by 2024. I guarantee you. They have to. Because that's how that's how it works. So you enjoyed, if you bought the dip right down here, right? You enjoyed a nice bull market for 1,051 days. That's like 2.5 years, 3 years. And that could have changed your life, right? That's like buying Bitcoin in 2015 and holding it till 2018, the beginning of it, and then just selling. Or buying Hex 2 years ago. Yeah, so this is looking like it's setting up on gold to be just a giant cup and handle. And then massive breakout, right? Okay, what is going on? It's gonna look something like this. A shot to like 2,600 bucks. That could happen by the end of this year. Do you understand what that means for the mining stocks? The mining stocks are priced at like $1,700 gold, or not even. Like I'd say 1,200, somewhere down here. So if gold actually goes, hold on, give me a second. So gold and silver is priced at around like 1,500 gold, right? The mining stocks are. That's what they're priced, kind of priced at. Because of crypto, everyone just chased momentum stocks, tech stocks, and crypto. You know, mining stocks are not exciting. Well, that's why it's the most undervalued. So if you're looking at the most undervalued stocks, you're looking at the most upside potential. Besides like Hex and all that other cryptos that I'm looking into, because those are different. They actually it's like a new invention, right? Produces yield, which is the biggest thing in demand in the world. Anyways, just to 2,500, that's a 70% increase on gold's price. That's like a 10x at least on all the mining stocks, at least. So because eventually the mining stocks will start catching up with the gains of gold, because they haven't. They're still priced literally at 2014 levels, 2013, like the year levels. I don't have that chart up right now, but you guys get it. I've shown it plenty of times. Real quick, let's take a look at the news. So to recap, Powell has to raise rates in a meaningful manner, like 50 basis points or more. If he doesn't, then I guess we're going to have runaway inflation by June, July. So I think he will. And either way we win, right? Because if you're invested properly, you're going to win either way. I preferably would like a little, I would like to see this play out where he raises rates, stocks fall, and so does gold down to like 1850, 40. And then that gives you one more buying opportunity. And then after that, it's ship is sailing, man. Train's gone. So I have some articles up. I just want to show you this. Yeah, this is the beginning of a recession. We haven't seen this in a long time. Well, since COVID, right? They need to like show us longer charts. See, we're at the beginning of a recession in the end of 2019 and the beginning of 2020. I said that, remember back then? And then this happened, right? Look at where we're at again. Looks a lot like this. So there's a huge spread between, there's a premium on physical versus paper of the metals. The only thing paper I buy, I mean, there's a Sprott ETF, you could do that, but the only paper I buy is speculating on mining stocks. If I want the physical, I just go get the physical. I'm not gonna like buy a ETF representing the physical, like, you know, like people buy Grayscale Trust versus buying Bitcoin. That's stupid. Another reason why Bitcoin is like not going to 100,000. I had a lot to talk about here. Oh, the housing market. Yeah, housing. We should see a nice correction in this housing bubble that's just gone insane since 2020, right? Because of all the lockdowns, everyone moved out, and you know, now they're all flush with cash from the stock market. And then everyone ran out and bought homes, and then so did BlackRock, you know, that hedge fund. So what I'm trying to say is, you're going to have an opportunity. When is the best time? I don't know. I'm not sure. We have to see how things play out in the next few months. Like, it really depends on when Powell capitulates. But does that mean there will be more money instantly to go buy more homes? No. Because the money doesn't go out to the average person. It just goes out to the like top 10% who own assets or equities, right? Or income producing, assets, businesses and whatnot. I'm curious if they're going to send out checks again. Because that's kind of what they have to do. They have to do some sort of UBI thing. Because the average person, I mean, they're screwed. The cost of living's going up. They're probably paying more taxes as well. Because if you get a pay raise from your job, it's not keeping up with inflation. And now you're in a higher bracket, let's say, and then you're just paying more in taxes. And another sneaky way of taking your money. Not only does everything cost more, right? And it happens slowly and gradually, including your utility bills, but you're going up in the brackets. And at some point, I've said this in the past, a McDonald's worker is going to be making like, well, what is the one bracket? Over 50 grand. And then they're not paying 15% in income. They're paying 20% in income tax. Oh, man. Yeah, look at this. It's already, so purchase mortgage applications index. Yeah, the applications aren't even going out. I don't even think the banks are going to be lending. They're probably not. Because they have data that the average person doesn't. And they know that a lot of people are going to default. And maybe they don't want that risk, right? This is by Wolf Street or Richter. Average 30-year fixed mortgage rate conforming is at 5.37%. Listen, the mortgage rates, even if you have a fixed rate mortgage, did you account for the higher cost in utility bill, food, gas, everything, right? So even if you had a fixed rate mortgage and you're like, well, the inflation's wiping away my debt, that doesn't mean that you could afford the payments if the price of everything else goes up. You got to keep up with inflation and outpace it. You have to have more money coming in year after year. And if inflation's running at 20% right now, that means you need to make 20% more. Actually, no, you got to make 40% more, because the more money you make, the higher again you're going up in the bracket. People don't realize how destructive inflation is. It just wrecks everyone, even the upper middle class. It just destroys everyone. The good news is, at some point, it just all comes crashing down. There'll be some sort of monetary reset, another 1913 deal, right? So, but for the next couple of years, it's going to be a rough road. They're going to ride this until the wheels come off. Powell could temporarily stop inflation, not make it go down, just stop it for like a few months, maybe towards until the elections, by raising rates now, and then he'll capitulate probably at the end of this year and send out checks. I don't know. The balance sheet will probably double again. Some event will happen, and then we're gonna see the biggest bull market in commodities, and cryptos will probably take off as well. And that'll be that'll be the wind in our sails to escape from the storm that we live in. I think I've been talking for a while. Join my private group. Links are below. Go to my website. Find me on Twitter, everywhere else. Please share my videos. If you don't, I'll stop making videos. Eventually, there's no point in making them for a dwindling audience. And it's funny because I'm right all the time, right? And if you listen to me and you timed it well, you would have done very well for yourself. I've already helped make a lot of people wealthy. And people just don't appreciate it, you know? So if you don't, then fuck off, you know? It's fine. I'm going to make it no matter what. But you? I don't know. Maybe go watch someone who's more entertaining, or just feeds you shit you want to hear, or whatever. If you find this boring, then it's not for you. It's only for people who are taking everything seriously and are doing well and looking to do even better. Till next time.